What is going on, investors? Hopefully, you guys are having a great day out there. Time to talk about Snowflake Incorporated, ticker symbol SNOW. Got to be one of the best tickers on Wall Street at the current time. This stock just reported their Q1 earnings. We're going to get into them. Not only did they report Q1 earnings, we got Q2 guidance in terms of revenue. We also got an upward revision of full year guidance as well, at least from the revenue side of Snowflake. So we'll talk about that as well. We'll jump over to the numbers on this one as well. Take a look at the revenue, the profit, the balance sheet, the cash flows, everything that we normally do here on the channel. Now, the last thing we'll do is we'll look at this stock from a chart perspective, a technical perspective, and you might be asking yourself, why the heck is this stock down? Look at this thing. This thing was up at $400 per share, and really since March, this thing's been trading sideways between about $220 and $240. It has not been able to get above $240 per share for 2-3 months now, and we'll talk about this. Look, you couldn't go one day on YouTube just a few months ago and without some stock analysis guy here on YouTube talking this stock up. You couldn't go on CNBC without somebody talking this stock up. Why is it down 30, 40% from its highs? We'll talk about that. It is as clear as day. When you open up the financials, it is absolutely as clear as day why this company stock has continued to go down and down and down. So we'll talk about that. Hopefully get you cleared up on what has been happening with this one. Look, it's got a 52-week high of $429 per share, and we were sitting at about $185 just a few weeks ago on this one. It's got a $67 billion, that's with a B, $67 billion market cap. That's also a problem for this stock as well. Now, we had our Q1 earnings come in today, came in at $213 million. That's up 110% from year over year. That is explosive growth, but here's the rub. You got 2Q revenues coming in between 235 and 240. That's only, and I say only, but it's slower growth than what we saw this quarter. They're going to grow 80 to 92% year over year growth. That could be why this stock is down in the after hours. We're trading down about 4% on this one. Now, we were up about 2.3% during the regular session. So give or take, you're off about $5 from the start of the day on this one. Now, for the full year, they upped the guidance just slightly. They were at $1 to $1.02 billion. Now they're at $1.02 billion to $1.04 billion. Expect them to come in a little above that. This company, especially how their stock has been performing, would want to sandbag guidance to a certain degree. The street's probably factoring that in as well. Now, again, I talked about how you couldn't go a day on YouTube without somebody pumping this stock, somebody on CNBC pumping this stock. Somewhere out there, people were talking this stock up. And why the heck is it down? And it is clear as day. This is a statement of operations where you look at revenue and profit. And I tell you what, if you've never pulled any of this statement up on your own, I am here to help you. I am here to help you, walk you through this, help you understand this, help you understand why this company continues to go down. Now, we've got our 3 months ended here. This is our most recent quarter here on the left-hand side, the previous year on the right-hand side. We've got our revenue here went from 108 million. These figures are in thousands, so you get to add 3 more zeros here. This is 108 million. We came in at $228 million. Again, revenue growth of over 100%. You'd think, wow, shouldn't Wall Street love that? Well, first of all, I want to remind you that we have a $67 billion valuation on this one, and we're doing $228 million in a quarter, and they're guiding to $1 billion for the full year. So they're trading at 60 times sales, not 60 times earnings. They're trading at 60 times sales. So they certainly have to grow into that valuation, and the Wall Street knows this. We've got our cost of revenue here. Look, this is a really high margin business. Okay, we spent $42 million, 97 from a cost of revenue perspective. Again, we doubled this top line, more than doubled this top line. You'd expect this cost of revenue to double as well. It did. That gives us our gross profit coming in at $131 million. Again, that's about a double over where we were the previous period as well. So All of that looks great, okay? Minus that this is a $60 billion company, this looks great. Now, unfortunately, we have these operating expenses as well. We've got sales and marketing. Those almost doubled. We went from 97 up to 166. Take a look at research and development. That tripled, okay? We went from 33 up to 109. It more than tripled, actually. And then you got general administrative. That went from 31 to 60. So take a look at our total operating expenses. Remember, I told you that our revenues more than doubled, okay? But unfortunately, our operating expenses did the same. They basically doubled as well. That gets us an operating loss right here. Forget this top line. Remember, when these companies put out press releases, okay, they're going to put their product revenue up at the top. They're going to put EPS or whatever they want to put up top. They're going to put adjusted numbers up top. Just come right here to operating loss, okay? We went from 96 million, more than doubled, to $205 million. So while this company did a nice job growing their revenue, how did they do it? They had to spend a bunch of money. If your kids have a lemonade stand out in front and they spent $10 to make $20, you would say, well, you know, they spent $20 to lose $10. You'd say, well, son, you lost some money. Try again next weekend. Well, they go out next weekend and they spend $40 to lose $20. You'd say, well, you still got to keep trying. And that's kind of what Wall Street is telling Snowflake. They are doubling their revenue, but they're doubling their expenses as well. That is leading to massive operating losses. And guys, Wall Street doesn't like this. I just did a video on NVIDIA, where NVIDIA, they're not growing at 100%, but they are growing at a very, very rapid clip. And they're growing profitably. Okay, not only that, they pay a dividend. They got a stock split. They've got all kinds of stuff going on in NVIDIA. Snowflake's nowhere near that. The other big bad thing is, look at this dilution. So we had 54 million shares outstanding last year. Look how many you got now. 291 million. So last year, if you had one share, you were one of 54 million. Now that same share, you're one of $291 million. This is like baseball cards where they, maybe you have a rare card, but then Topps just keeps making more and more and more of them. Well, now it's not a rare card anymore. Okay. And so that is what you're getting down here. So you have explosive revenue growth, but unfortunately they're doubling expenses. They're doubling their losses. They're like quintupling the amount of shares that are outstanding. All of that added in totality is the reason why this stock continues to go down. This is why this was not a stock I was recommending when it went IPO. But we can look. Can you come in here? Is there a price to buy this stock? Yes. And that is why we're going through these numbers. Now, from a balance sheet perspective, you'd expect this company to be crystal clean. Okay. They just went public. They're not really going to have a lot of debt, at least from a traditional debt, like financing perspective. Everything looks good here. They are going to be able to survive these losses. Okay. They've got $3.2 billion in short-term investments. That's basically cash. They got another $640 million just basically sitting in the bank. They got about 3.9, almost $4 billion in change in terms of cash. So even though they're losing this $200 million, they've got plenty here. Okay. The other way, not that they're not going to continue to raise money. I would actually expect them to continue to raise money because the executives will want a nice pillow, a nice margin of safety. Now, from a cash flow perspective, things look a little bit better, but I hate analyzing these companies from a cash flow perspective, and I'll show you why. We pull down this dreadful net income number of $203 million. Last year, again, we were sitting at 93, so we doubled our net loss on this one. Went from losing 93 million to losing 203 million. But unfortunately, with cash flows, what do we add back in? Stock-based compensation, okay? Can you pay, look, if this stock keeps going down, do you think Snowflake's going to be able to pay their employees with stock? No, they're not going to want to take it. They're going to want to take cash. So cash is going to flow out of the business. Whether it's stock or cash, it's basically the same thing. So they add this back in. So from a cash flow perspective, it looks good. We went from losing 6.5 up to 21.9 on the positive side, but that basically just masked the fact that they compensated their employees massively in the quarter through stock-based compensation. All things being considered, everything looks clean here from a cash flow perspective. I just want to point out to you that if you got burned with Snowflake, you bought in here on the hype, you bought in here, north of $300 on this one, Look, you might be able to get your money back on a stock like this at some point. Maybe. We'll see what happens. But next time, just wait. Wait until you see revenue trends. This company, when they went public, they were not profitable. Okay. It was clear as day when this company went public that it was all hype and it was a lot of losses, and the losses were going to continue. And at some point, Wall Street ends up hating that. Okay. Now, there are some rare examples. Companies like Tesla, companies like Amazon, but those are consumer-facing companies. Companies that the consumer can touch and feel. Amazon, Tesla, we can touch and feel that. The market does not have it for like enterprise companies like Snowflake, where literally the average person, you ask the average person on the street what Snowflake is, and they're going to tell you it's something that falls in the mountains when it's cold. They're going to have no idea what this company does. So this type of hype, this type of stuff doesn't work unless it's a Tesla or an Amazon or one of these consumer-facing companies. So I drew this long trend line in here. We were on a downtrend. Now, it really bottomed out and kind of reversed trend a little bit. There was some hope here that this thing kind of was on a nice little rally here, but we have not been able to get above $240 per share on this one. Okay, it has been like a hard stop. We were basically at about right around 240. We were at 238, 236 before the day started, and now we're sitting back in this range. Look, since March, we've been trading roughly between 220 and 240 on this one, and until further notice, this stock is going to be stuck in this range. Now, unfortunately, you will likely have further dilution in this stock, okay? You have them playing their employees and their executives. You also probably have insiders continuing to sell this stock, continuing to get out. That is creating pressure on the stock. Now, the bullish sign, if you are long this stock, whether it's at a lower price or a higher price than where it is today, you're looking for a break above 240, okay? Not just a break, not just peeking its head above, which it has done a few times over the last few months. You want a big green candle above 240, okay? You get above 240. Look, the next stop is right up here at 270. So if you want to play this as a trade, maybe there's an option set up. I don't know if options are trading in a stock like this yet, but you got a stop loss here at 220, okay, which is like $8 lower than where the stock is right now. In fact, I wouldn't necessarily jump in here at 228. The momentum looks like it wants to take us down to 219, 220 on this one. If you can get this at 220, you can put a stop loss down here at 208, 210, somewhere in there, play the bounce up to 240. If you get some momentum on this one, I think you could easily come back up into the 260s, 270s, easy, okay? There's not a lot that's going to hold this stock back once you get above 240, okay? Once you get to 270, there's going to be some hard resistance. 270 was support here, support here, support here, and it's basically broken down since then. So that's how I would play this. From a very shorter term perspective, there is probably a way to make money here, okay? But it's only, for, in my opinion, for the little bit more experienced trader and the more disciplined trader, okay? You're setting a stop loss on this one because this thing can go against you, okay? They could announce that they're raising money. There could be a lot of bad stuff that could happen that could send this stock down. If the markets turn negative, stocks like this have just been getting punished this year the minute markets turn negative. But we get positive momentum in the stock market. Things all look pretty good. Again, I can see this thing bottoming out at 220, 210 potentially, breaking above 240. You've got, $20, $30 in upside on this one. This is not a stock I would look to go long, just because from a fundamental perspective, it doesn't make sense. You got a $60 billion value, $67 billion valuation. That is 67 times forward earnings that we're giving him credit for this year. Not just, okay, they're not going to earn any money on that $1 billion. They're going to burn through probably close to $800 million this year, maybe even close to $1 billion in losses. Fundamentally, from just an operating loss and an operating perspective, just fundamentally, this stock doesn't make sense. I would not go long this. But from a trading perspective, from a chart setup perspective, there probably is a way to make money with this stock. So hopefully I didn't burst too many bubbles out there. If you got into this one at a higher price, especially up here in the $400 range, just take it as a lesson learned. Jump into the numbers. Be patient. Don't just take the advice of what people are telling you. Make these decisions on your own. You will get better at stock picking in the future. Hopefully, you guys enjoyed this video. We'll be back again soon with more. Good luck with your investments.